Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Attila Pinky, and in today's video, I'm going to talk about that there could be a new bill in the US Congress, which is actually the most comprehensive yet. And actually, it does raise some eyebrows in the crypto industry. So let's talk about it. The second thing I want to talk about is that Gary Gensler, who is, the chairman of the SEC, is actually agrees with his predecessor and saying every ICO is a security. Agree with this statement? Well, this can bring also interesting things on the table. And the third topic I wish to discuss is HSBC is the latest UK bank to block payments to Binance. Well, actually the third one in the row. Guys, all this in today's video. And if you would like to keep yourself up to date, which is, I think, crucial if you're into crypto, then you should definitely subscribe to this YouTube channel, Blockchain Bloom. Only thing you have to do, subscribe, bell button, all. That's it. And then you're getting the notifications as soon as a new video is out. Check out the links under this video because there are many useful links you can save money with when you're trading and so on and so forth. And also I have a free course for you. If you're a beginner, for instance, how to start to invest in Bitcoin and other cryptocurrencies, very useful tips in it, and it's free. You just have to watch it. And now let's move on to the prices and see how the market looks like at the present. So Bitcoin is at the moment $38,164. Ethereum, well, this is pretty much less than 1% minus. Ethereum, a bit less than 1% up, 2,506. US dollar. When we're looking at the last 24 hours and the winners of the last 24 hours, then X Infinity is at the top again with 11%. Then we have Quant 11% and Ravencoin 9%. These are the top three in the gainers. And when we're looking at the losers, Voyager token minus 10%, Stacks minus 9%, and Heather Hashgraph minus 5%. So basically, some go up, some go down, a bit sideways when we're looking at Bitcoin and Ethereum. And also it's worth to look at the Bitcoin chart because, we had this massive increase. Wow, how beautiful it was. But we kind of stopped and then we turned back. I drew here the Fibonacci retracement tool. And look, when you're looking at this, then we can see here the Fib levels. And look, even this here, which is the 0.382 level, actually this is around here. But if it will cross it, then, in these cases, the Fibonacci can help a lot. And, it's a fulfillment prophecy what's happening here because many people are watching these levels. So act because of these levels. The more important one is, I think, here this 0.618. This level we see this is actually right now at 34,000, a bit more than 34,000. So where Bitcoin can come back. And another thing I think we should really focus on. I quickly move on to the daily chart and switch on the 200-day moving average. And what have we seen here? Definitely, when we are above the 200-day moving average, we talking about a bullish scenario. And what happened here? Actually, Bitcoin hasn't even reached. It turned back before it. And we have seen something like this in the past, before. And this is definitely not a good sign. We should continue and we should cross this, but actually we haven't even reached it and turned back. So we will see how now things play out, but I'm definitely not 100% bullish. Don't forget, we are in the downwards trend. So we are in the bearish moments. We had beautiful 10 green candles, 10 days in a row, but it actually wasn't enough so far. What it can happen, definitely, we can turn back and then retry to reach this level and cross it. It's possible, but actually this time it didn't play out. But to be honest with you, in long term, it doesn't really matter because we believe that Bitcoin is going to be huge. It's going to go up. now we're talking about matter of weeks, matter of months, where we're actually going now sideways or down. We are in a bearish trend, and this will change definitely into a bullish one later on. But right now, in in these videos, we always checking every day the present situation. But right now we here, when you zoom out, then you see what an incredible increase it was in the crypto industry market, in Bitcoin, over the years. So when you zoom out, this is important. When you zoom in and you're looking just a couple of weeks, couple of months, and you are actually in a bearish case, then yes, it doesn't look good, of course. But not financially wise, but many people, what they do, they actually accumulate more when the price goes down because they believe in it in the long term and in the future. When the price goes up and it's reaching new highs, definitely it's not the best time to buy. Or if you're doing dollar cost averaging, you buy always just a little bit. That also can work out for you. But definitely better when Bitcoin goes down, because you buy it on a discount price compared to the new or the previous stops. Okay, but not financial wise. This is very, very important, guys. And now let's move on to the first news. And the first news is about that we could have a actually the most comprehensive crypto bill yet. And it raised many interesting issues, and let's discuss them. It looks like that the US was a bit sleepy when it comes to crypto regulations and crypto bill, and now out of the blue, somehow it's now out to check, and then people are going to vote if it comes in effect or not. But yes, it's very, very interesting. So actually in CoinDesk you have a pretty long article where you can read about it. But more interestingly, I think we have the Electronic Frontier Foundation on Twitter, and they actually have here 6 reasons why they say we hate the new cryptocurrency surveillance provision buried in Biden's infrastructure bill. And they put out these 6 points, and let's check them actually. So it will require new surveillances of everyday users of cryptocurrency. Yeah, so actually, definitely it's going to need more control. It would force software creators and others who do not custody cryptocurrency for their users to implement cumbersome surveillance system or stop offering services in the United States. So definitely can make some software creators' life more difficult in the United States with these regulations. It will create more honeypots of private information about cryptocurrency users that could attract malicious actors. Don't forget, if they're keeping and making databases about how much crypto, who owns with all the data, your address and everything. And what's happening with these databases? Many times they get hacked. When it's get hacked, information is out, and then everybody knows who hacked it and got that information, who has how much crypto. And this is actually definitely not good. It will create more legal complexity to developing blockchain projects over verifying transactions in the United States, likely leading to more innovation moving overseas. So, now they had the US this great opportunity because China went totally against Bitcoin, banned Bitcoin mining, and now US had this opportunity that maybe they can lead this kind of new crypto innovation. But if they going to do the things what they planning in this bill, then these innovations will rather go overseas, and US won't have these opportunities. It is impossible for miners and developers to comply with these new reporting requirements. So there are new requirements which are actually very difficult, or as they say, impossible to meet. It creates uncertainty about the ability to conduct cryptocurrency transactions directly with others via open source code, for example, through smart contracts and decentralized exchanges. So what's happening to these great peer-to-peer things? So this is definitely a bill which came out of the blue, and then now there are many of them who actually are raising eyebrows that this is actually not good. But definitely the other part are saying, yeah, okay, let's push this bill through. So this could be very interesting when this bill goes live, how it will affect the crypto industry. I think bottom line, Bitcoin will be still here and it's things going to continue, but will not help to make the innovation continue in the US. But we will see. Okay, second thing I want to talk about is all about what Gensler said, who is, the SEC chairman, and agrees with the statement that every ICO is a security. And if he looks at it like that, and he is in charge for a couple of years now, well, that's also interesting. So we do know that regulations are coming, and now we have here the chairman of the SEC, and actually he agrees with his predecessor that every ICO is a security. So Gensler said he believes crypto trading platforms might already have securities listed. The U.S. Securities and Exchange Commission, the SEC chairman, Gary Gensler, said that he believes the vast majority of crypto tokens and initial coin offerings violate U.S. securities law. In a speech at the Aspen Security Forum on Tuesday, Gensler said that he agreed with Jay Clayton, his predecessor at the SEC, who once famously said that in his view, every ICO I have seen is a security. I believe that is what Gary Gensler is saying, that I believe we have a crypto market now where many tokens may be unregistered securities without require disclosure or market oversight. These tokens may allow markets to be manipulated, which in turn could harm investors, the regulator said. So Gensler reiterated earlier comments that stock tokens and stable value tokens backed by securities qualify as securities in his view, meaning they must be registered and their issuer must abide by existing federal law. A typical trading platform has more than 50 tokens on it. In fact, many have well in excess of 100 tokens, while each token's legal status depends on its own facts and circumstances. That probability is quite remote that with 50 or 100 tokens, any given platform has zero securities. So what's happening with those tokens, which turn out to be securities, and there's a big likelihood, they're going to move it, how it will affect those token prices. So what's happening here with the regulations, it's again like a mess what is going on, and therefore it's very important that in the next couple of years, regulations and everything getting clear, and then crypto will have a clean path, which way to go, how to grow. Everybody knows what's going on, because now in this moment, it's much more risk involved in crypto. In my opinion, it definitely has a future, but we have this kind of a rocky road where we sometimes don't know, what's happening. What's the next step from the regulators? How this whole story will continue? It will continue. Just the question is in how, in what speed, in which way, and so on and so forth. And obviously, that's why it's crypto an investment which can bring a lot of gains, and is not financially wise because it includes a lot of risk as well. With the risk getting less and less over the years, definitely the profit you can make in it's going to be less and less because more people are willing to participate. So this is also interesting to watch, and the story hasn't ended yet. I'm in the show because I have another bearish news. This is all about HSBC, is the latest UK bank to block payments to Binance. We can tell that crypto and Binance, it's not the most favorable things in the UK when we're looking at the bank sector. And yes, here's the new one. HSBC is the latest UK bank to block payments to Binance. And let's a little bit zoom in so you can see it better. So HSBC has informed customers that it will stop credit card payments to Binance wherever possible. It is the third major UK bank to limit payments to exchange. After Barclays and Santander, HSBC is now the third major bank, as I said. And yeah, now they also don't want you to use your credit card or debit card to make payments to Binance. And in response from Binance, the exchange limited the amount of leverage available from 100x to 20x, reduced the daily withdrawal limits for unverified users, so you have to do this KYC if you want to withdraw more, and cut futures and derivative trading across Europe. So they definitely making moves, but it looks like, in the UK, the authorities and the banks are not really happy with it. What happened with the Financial Conduct Authority, FCA, came out with the warning back in June. And since that, things for Binance doesn't look that great in the UK. Again, the regulations has to be clear what to do, how to do it, and then these centralized exchanges will meet these regulations. Otherwise, they cannot really operate. Therefore, it's important. So as you can see, there was a response from Binance. They reduced things. They they forced their customers to have KYC in a way that they drastically decrease the withdrawal limit if you don't have the KYC. But we will see what will be enough. But this is definitely a difficult time for Binance in the UK getting all this. Guys, that's it for today. Don't forget, if you like this content, smash the like button. And also, if you would like to get this daily fresh cryptocurrency and blockchain news to keep yourself up to date, then subscribe to this YouTube channel, Blockchain Bloom. Subscribe, bell button, all. That's the only thing you have to do. And of course, tomorrow, I'm coming back with the freshest. Have a good one. Bye-bye.